Hi there, my name is Keller Burnett, and I'm a CPA, and I'm gonna do a little instructional video about options, in particular with trading on Robinhood, and then I'll show you what I believe is quite an easy way to make a lot of money on options. Now they're risky, so just be aware of that, but I'll go over how options work, and then how to make money on options, and then over Robinhood account. Now I'm gonna recommend that you use a Robinhood account because I think it's the easiest to set up. I've tried to do it with Fidelity. Ameritrade is your next best one, but with Robinhood, I had my account and options ready within about 2 days. And with Fidelity, it took me maybe 3 weeks. And even then, I'm not sure if I had the same level of trading authority that I did with Robinhood. So if you've never used Robinhood before, I'm strongly going to recommend you open an account. I'll have a link, $5, who cares? But, appreciate it. And then, and you get the $5 too, or whatever. But this is much more about making money than anything else. I'm not trying to promote Robinhood. You can use Ameritrade. I really don't care. But that would be my next recommendation. A lot of options traders use that, but it's Ameritrade's going to take you like 5 hours to install, and Robinhood will get you going in a couple of days. So, okay. So, like I said, I'm going to fairly quickly go into how to make a lot of money with options, but first, let me talk about what are options and the basics of it. So stocks, stocks versus, let's say stocks versus index. So there's the S&P 500 index. People are familiar with this. And when you buy this, there's rules and parameters that they follow. You get a share of 500 stocks. And then you're basically following the market, but you're not exactly following the market. You're actually following only the biggest, oldest companies. So you don't have a big share of new startups. You don't have a big share of any company under $1 billion. And you have an unusually large share of what most people would consider stocks that aren't really going to go anywhere, like ExxonMobil, Ford Motor Company, maybe Toyota, maybe oil sees a revival, maybe Ford and Toyota see a revival in their ICE products in their gas powered cars. But when you do an index, you become kind of heavily weighted toward these old, outdated tech in exchange for having some share of up-and-comers like Google, which calling that an up-and-comer is, of course, questionable, but you'll have a share of that if you get in the indexes. So as you can kind of imagine already, when you buy into an index, you're basically agreeing that like a third of your money will pretty much go nowhere, and then you're relying on all the other stocks to bring it up. And you could say possibly it's a way to reduce volatility, like the value of Ford, or I don't know what the PE ratio is, but it might be a 20 PE ratio as opposed to 50 for Google, or 200 or something. So there is some liquidity that you're getting from an index. So, but anyways, so that's why I will generally try to recommend people to learn to pick individual stocks as opposed to just going with an index. Now, I'm not a believer in you have to buy every penny stock that you've heard of, that you got to buy 1,000 different stocks because who knows which one's going to make it. But at the same time, picking the stocks that are just below index valuation can be quite profitable. Tesla, of course, is the best example of this in recent terms, where Tesla has gone up about 1,000% in the last year or two, and that is largely because it was below index worthiness and then became index worthy within that year, which created 1,000% gain in that year. Now, going forward, can you expect Tesla to have another 1,000% gain this year? And you can assuredly bet it won't happen. Tesla might double. It might quadruple. That's really, really hopeful. But it could double, surely it could double. And if you're an original investor, that's like 30x gain, whoop-de-doo. If you're investing today at this price today and you get a 100% gain in a year or two, that's great. That's really great, but it's not the same kind of return that the original investors get. So yeah, and there's still that speculative risk with Tesla. I mean, not near as much now that it's near index inclusion ready, but there's. So anyways, I'm still pro Tesla, but just talking about volatility, and the main difference I'm talking about is now that Tesla is or about to be in the S&P 500 index, the upward momentum. Most of it has already come. You'll still see 100% gains and so forth in a year, but 1,000% gain might never happen again. I would be very surprised if it ever happens again with Tesla, but those are just some things to talk about when it comes to indexes as opposed to individual stock investing. Index, you're getting a lot of garbage in order to get the good stocks. So I recommend try to get rid of the garbage and only focus on the good stocks. If you're really obsessed with indexes, I think ARK investing, they have some decent indexes, but I like their investment philosophy, and they focus on tech and up and coming things. But even still, when you think, if I take the ARK index and I compare it to the individual stocks that make up the index, it seems like the individual stocks do better. So now let's go ahead and so that first part is why to do individual stocks as opposed to an index. And people always talk about the management fee. That's not really that relevant. Management fees for most things, it's good to be aware of them, but 1%, 5%, which is a humongous difference, is relatively trivial compared to the possible return that a good money manager will get you. So while 5% is 5 times more than 1%, a stock that goes up 30% as opposed to 20% is a humongous difference. So the 5% could be worth it there. So, okay, that's covered. And if you like that, feel free to join the Patreon or checking out Bitcoin 1776. We're going to be trading dollars for tokens. You can mine the tokens or earn them if you join the newsletter. We'll have little giveaways that will be like $500 giveaways. They'll be pretty fair, like little contest things. Just check it out in the comments below, and okay, and I'll keep going. So about thank you. So about options.